Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
And how real money has changed over the years, particularly the investing of your real money. And you need to understand how it works today, not how it worked 20, 30, 40, 50, 60, 100 years ago, because it's very different today. Hi, welcome to Talking Real Money. I'm Don. That is Tom over there. And we are here to help you deal with your dough at 800.
Are you waiting for me on that one?
397. I lost my train of thought for a minute. 877-397-5666. Is that right? I got it right. 877.
I started giving the office number there, so I wasn't on it either.
See, I get all these 800 numbers wrapped up in my little tiny wee antique brain.
Speaking of things that have changed in the last 50 years, there you go.
Well, 60 years. You know what's funny is the how people invest in the country today is vastly different than it was 60 years ago. 60 years ago, the big investment product for the American middle class were insurance products, life insurance and fixed annuities. And here's a great example.
Oh, the Wall Street Journal. You planning a little stock manipulation?
Oh, no, I just keep my eye on trends, that's all. Well, Maggie, how's the world treating you? How's tricks?
Tricks?
I brought along this brochure. It gives you a pretty good idea of the annuity we were discussing, Mr. Lytham.
Oh, yes, I see. Yeah. Say, I wish you'd call me all this.
What show's that from?
I don't know.
Come on.
How's tricks? I don't get that a lot at home, so
well,
I like that.
The guy is getting an annuity sold to him by a very famous character in a very famous TV show from the late 50s, early 60s.
And now.
Ready? Do you know it yet?
Robert Young.
Dr. Welby?
Jane White.
No, that's...
Ready?
With Eleanor Donahue,
Billy
Billy
Graham. Oh,
Lassie?
In Father Knows Best.
Oh, I never... Okay, all right. I would have lost Name That Show in 3 whatevers.
You did.
Yeah.
Jim Anderson, the lead character in Father Knows Best, was an insurance executive.
Oh.
They didn't even call him salesman. He was an insurance executive. It was a big executive position, and he was a respectable member of the community selling life insurance and annuities to people. My, how times have changed today.
There's nothing wrong with selling insurance today.
But it's changed.
No, that's true. And
people don't invest, thankfully, in insurance.
Well, they're not buying as much insurance as they used to.
Yeah. And there was an article in the Wall Street Journal about
we'll spend some time on that. Yeah, we'll spend some time talking about where they are, what they are selling you to make the real money. This will not surprise you.
That is going to be a running theme in today's show.
Yeah.
What the insurance industry, the brokerage industry, the money center banks, what they are selling you.
I think, and just to cut to the chase, I think the number of the week is $33 billion. That's the number of the week.
That's I'm going to have to guess what.
No, I thought you read this too. That's how much.
I read a lot of things.
That's how much Americans paid in overdraft charges in 2015.
Oh, yeah, I read that.
Do you think corporations want you to be efficient and pay attention to all the charges? No. Because they make the real $33 billion of your dollars went to your bank.
And then
wow.
I am going to take my one of my least favorite financial media sites to task on two fronts. Which do you think is my least favorite?
I'll go with
media
Market
site?
Watch.
You nailed it.
Okay.
There's an author that I disagree with on almost everything. I comment on his name is Brett Aarons, and he writes for Market Watch and the Wall Street Journal, and I think he's a troll. I really do. I think he just trolls for hits on the website.
Little guy lives under a bridge.
Yeah.
Okay.
Yeah.
Okay.
Brett Aarons. I'll tell you more about him in a minute. And the folks at Market Watch are recommending an investment. I can't believe they're recommending this as a place to park your cash. 877-397-5666. We want to help you. Call us.
Tom and Don are talking real money.
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full-color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
Your guides to a really great financial future. Tom and Don are talking real money.
877-397-5666 is a phone number you need to know to get the help you need to enjoy a better life and manage your dough the way it deserves to be managed, not the way people at Market Watch or people at the Wall Street Journal or people at insurance companies tell you it should be managed.
Now, there is one writer that we like at the Wall Street Journal named Jason Zweig.
I like Jason
Yeah, he's
Zweig.
worth reading every week. He writes a column called The Intelligent Investor.
Oh, I think some of them. I think he just fills space with some of them because he's run out of intelligent things to talk about.
Because, buying 3 index funds, you can't write an article about that every week because that's really not that interesting.
I know, but, this week's article.
Wow. I don't know what. I work in this industry, and I read that and go, I would have to spend 6 months trying to figure out what that investment really is.
They're an investment. Let's go there.
It's just
before
it's
we
so
go to Brett Aarons.
complicated.
Let's go there.
So, let's talk. But let's step back and talk about the big picture, because in the big picture, people know if we say invest in real estate, most people believe you're talking about
a house,
buying a house, right? Okay, so we know that. Then there are other people that say, nah, you really should invest some of your money in commercial real estate. So there are those among you that, buy buildings, you buy apartment buildings, or you invest in bigger projects. Okay, that's another part. Then there are people that say, I really want to invest in kind of the real estate industry. There it gets where the gray starts.
But the way to do that, and it's been a very effective way to add real estate to your portfolio, we strongly believe in the power of diversification. And there have been diversified investments in real estate called real estate investment trusts. And then there are mutual funds that own hundreds or thousands of these real estate investment trusts, giving you even broader diversification at relatively low prices. So what I don't understand is why Mr. Zweig and the industry feels it's necessary to create mutual funds that offer you, they're called interval funds?
Yes,
is that right?
interval
funds. Interval funds that offer you a percentage ownership in a particular piece of property. Not in a broad, diversified portfolio of property, but in a piece of commercial property. Now, I see a number of potential problems therein. One, why would the savvy investors take the best properties that they could buy in a group of, 10 or 20 very wealthy investors, or 2 or 3, and why would they share it with a gigantic pool of investors? My thinking is they're going to take their worst garbage and sell it to the general public.
And there are crowdfunding sites that already do this.
Which scares the living daylights out of me.
Me too. So, and when you read this piece today, there are liquidity issues because, as somebody in the article said, not everybody's Yale and doesn't need the money for 20 years. In this case, you can't get your money but quarterly, I believe.
And only a portion of it, about 5%. You can take out quarterly. And the article talks glowingly about the returns in real estate of annually over the past 10 years of about 6.93%, comparing that to the 6.95% of the S&P 500 with a little bit more stability. But early in the article, Zweig talks about the fees for these products.
2.5% a year. 2.5% a year. Now, you can go buy the Vanguard REIT for what?
For 1/100th of that.
Yeah, no, not 1/100th.
1/10. No. 1/10.
Yes, 1/10.
No.
Yeah, about
well,
1/10.
actually less than that. It's less than 1/10 now. It's like down to 0.1.
One of our advisors listens to the show. She's going to text me here in a minute and tell me what the number is.
You're right.
It's a much smaller number. And you get
quarter or
a
less
lot
of 1%.
more diversification. And you can get your money, let me see, tomorrow
whenever
if you need it. Yeah, so complexity often equals great for the person selling it and not so great for the person buying it.
Again, not to criticize Mr. Zweig, but to criticize him. When he talks about that 6.93% return, in the very next line he should say, but in these investments, 6.93% after average of 2.5% in fees is not much better than you would have done in bonds. Because it isn't.
Not over the last 20 years, no.
Right.
Yep.
So if you're comparing past to past, then and
because that sounds like 4.5%, something like that.
Yeah, and you cannot say, okay, real estate has been stable in the past. You cannot say that it will continue to be so in the future, because the minute it's like auction rate notes back in 2008, 2009, they had always been stable throughout their history.
They'd always never paid.
They'd never lost anybody a penny.
Then
bang.
Yep. Again, and for me, it's really the complexity, it's the lack of liquidity, and it's the fact that you can expose your portfolio to a widely diversified portfolio of real estate investment trusts at a fraction of the cost.
Well, let me just give you the perfect example. There is a fund at Vanguard called the Vanguard REIT Index Fund. You can get it as an Admiral share if you have 10 grand or as a regular investor share. Its expenses annually 0.26% per year.
Pretty close.
1/10.
Yeah, you're there.
1/10. And the performance, this is, again, we're talking about that average annual return of 6 or 7%. The 15-year average annual return for that Vanguard REIT, and longer is better, is 10%.
And so I want to go back to where we started. We do believe that your investment portfolio should include commercial real estate, for lack of a better expression, in the form of a REIT, in the form of a mutual fund that you purchase at a very low cost, and you can get your money back. There are all kinds of other REITs that we've talked about on this program called non-traded REITs. That we do not recommend.
Oh, wait, the pitch for those is they're totally stable. Their value doesn't fluctuate. It's because they're not traded, you can't get out.
Your first warning sign should be when you're a major custodian like Charles Schwab will not hold them because they can't tell you what they're worth at the end of the business day. No, I would not own them.
Here's the thing about Vanguard REIT Index. Not only is it cheaper, but it holds 158 real estate investment trusts. Now, tell me, I heard a couple of names, and it's commercial real estate. Now, do you want some unnamed commercial property in some town that somebody claims is worth X, or do you want to own Simon Property, the
That
biggest
owns a
owner
lot
of
of stuff,
malls
yeah.
in America, or Public Storage. Oh, have you seen their orange signs anywhere? Seen any of those?
And
Host hotels.
I believe the mutual fund that we use through Dimensional Fund Advisors does the same thing, but also internationally. So you could go to Buenos Aires and say, hey, I own a little piece of that mall right there, because they own thousands of REITs that hold lots of properties in them. So you get true global diversification.
Absolutely. And that's really, I mean, all these other things, and we're going to share some of these other stupid ideas that the rest of the media shares with you that you should just totally ignore because they're dumb and they're bad for you. And if you've got something you think is dumb and bad for you, give us a call at 877-397-5666.
Tom and Don are talking real money.
Yes, it's time for another one of those inevitable interruptions that go with this being a podcast from a live radio show on commercial radio. This one is about something you're going to really enjoy, though, and something from which you could derive a lot of benefit, and that is the fact that we are now bringing our live lunch ed classes to the internet so that you, along with the folks at our offices in Seattle and Phoenix and Portland, can actually attend the event. You just won't get lunch. You're going to have to go get your own. But you'll still get the same great education, and you get a free worksheet, and you get some other perks that go along with the class. Tickets are only $5. That's it, just $5, and you can get them right now at TalkingRealMoney.com. TalkingRealMoney.com. I guarantee that you're going to get a great education, and if you don't feel you did, let me know. I'll give you your money back. It's really just that easy. So sign up for one of our upcoming lunch ed classes today. Don't put it off because somebody might take your seat. Go to TalkingRealMoney.com, TalkingRealMoney.com. It's under the events section of the site, and I hope you'll attend one of the upcoming classes. And now, please continue listening to our program.
For your real life and real future, Tom and Don are talking real money.
Oh, I was looking at DFA's portfolio.
Yes, Dimensional Funds.
In the Dimensional International Real Estate portfolio, they have almost 300 real estate investment trusts
that own thousands of properties.
And among the largest, Simon.
Yep.
Public Storage, and one folks in the Seattle region will recognize, Westfield.
Yes, you might have heard of
another
them.
big owner of malls, huge holding there. Oh, and the Japan Real Estate Investment Corporation, British Land PLC, Nomura Real Estate Master Fund. These are huge.
Right, and so you
property owners.
Yeah, you get. I think what the sexy aspect of the investment that Zweig is talking about is, it feels inside to me, right? You're buying the expertise of somebody that can tell you why you don't want to be in malls anymore, but instead you want to be in these little land that's going to be developed, whatever it is. And this is always how things are sold.
In this DFA fund or that Vanguard fund, you're in those too. You see, that's the thing. In these portfolios, you own a piece of almost every commercial operation in the country or the world.
Yep.
And by the way, the DFA International Real Estate Fund, what are its expenses? You're bound to be a little higher because they're investing overseas, right?
40 basis, well, maybe higher.
0.28.
Wow. I mean, see, you get that exposure at a very low cost. Yeah, it's terrific.
It's just so.
Yeah, I mean, and this holds true in this industry. It's always about the new idea. It's always about the new thing that is going to make you rich and going to be easy. And it doesn't happen.
Speaking of which, here we go. Here's an article from MarketWatch by Philip Van Doorn. Philip Van Doorn. Need income? Question? These investments are great places to park your money right now. Guess what?
High yield bonds, dividends.
No, better.
Wow.
The yields on these can run as high as 8.5%.
Oh, goodness sakes. Structured note.
Good places to park your money. Energy Master Limited Partnerships.
Oh, yeah, that's been a real genius play the last whatever length of period of time. Insert here.
There is one of them that he mentioned, and I need to find it. I just had it up, and then I changed over to ClearBridge. It's called ClearBridge. I just love this one. ClearBridge American Energy MLP. This is one of the ones that he recommended. And it let's see,
paying out 8%?
Well, that's why I want to pull up the latest payout on this one because I had to refresh my screen here. Its distribution rate is 8.42%. Okay?
Wow.
Okay, they own energy properties. Want to guess what the fees are? The annual fees?
I'm going to say north of 3.
So far north of 3, they're in the Arctic.
5.
4.73% per year.
Wow.
So they're paying out 8.5. They're charging almost 5, which means they've got to figure out a way to keep making this payment to you. They got to make about 13%. A little over 13% every year on their money. And they do it by one of the ways they keep this dividend up is through leverage. The portfolio is 25% borrowed money. Borrowed? Gee, now what happens if oil tanks like it has?
Under 50 a barrel? Yeah, no, so this is not obviously a mutual fund because they can't do it there. What kind of
Well, no, it is.
vehicle?
It's a closed-end. It's a closed-end fund.
Okay, closed-end fund. Okay,
It's a closed-end fund. And this, I want to say, I want to call him names, but I know you're not supposed to do this. This guy is actually suggesting this to investors as a place to park your money.
We'll talk more about this during the show. You take your retirement money you saved, you put it there, and you get money back to finance your retirement. That is brilliant. I love it. We'll spend more time on this.
The risk?
Nothing.
If you got some of this stuff, you need to call us before you get in deeper trouble. 877-397-5666. 877-397-5666.
Tom and Don are talking real money.
Hi, brief break time. I'm Don, and I really wanted to share this with you because this is something I'm really excited about. I have taken much of the work that we do for our online Real Investing Journal and put it into a quarterly magazine that is, I have to say, pretty good and pretty cheap. And it is the only publication I can find anywhere that is totally devoted to real investing. You will find no business news there. You will find no lifestyle information. You will find no hard news, political news, speculation stuff. It's all about the science and the process and the discipline of real investing, and it's a way to keep you on track toward a better future. It comes out 4 times a year, and it's going to cost most people $25 a year. That's all, just $25 a year. But because it's brand spanking new, a limited number of people can become charter subscribers at the lifetime price of $15 per year. Plus, I'll get you a copy of the very first issue as a bonus while the supplies last, of course. So here's all you need to do. Just go to realinvestingjournal.com/subscribe and subscribe. And you'll start getting it in the mail every quarter. If you're one of the first 200 or so to subscribe, you'll also get the very first issue as a bonus. So be one of the first to get the very first magazine ever about investing and nothing but investing. Real Investing Journal, and you can subscribe right now, really easy, realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe. Now back to the show.
Reality radio for a really great future. We're talking real money.
You know, I really love this line. I'm going to keep playing this over and over again.
Oh, the Wall Street Journal. You planning a little stock manipulation?
Yeah, planning a little stock manipulation.
Every day, yes.
In 1956, if you read the Wall Street Journal, apparently you were planning a little stock manipulation. Otherwise, you were buying life insurance. 877-397. I just love that line. 877-397-5666. 877-397-5666. It's going to be at the beginning of every feature I do next week.
And if you're planning a little bit of that before you do, please read Black Edge. Please read Black Edge,
yeah.
and then plan your little trading strategy, your little stock manipulation, because you're gonna lose.
Or if you're like our president and you prefer not to read, watch Billions. You'll get the same message there.
It's true. That's true. Easier. I could just sit there and take it all in 50 minutes.
Exactly.
Yeah.
I love that new female. I love that new androgynous character.
Oh gosh,
in Billions, she's awesome.
Well,
she's
you
brilliant.
just like her because she brought up Eugene Fama.
I did. She brought up Eugene Fama. I like that a lot. 877-397-5666 is our phone number. If you're planning some stock manipulation, call us first.
We want to know.
Sam, it's your turn. Welcome to Talking Real Money.
Don, thank you so very much. Because of you, back in the 90s, I have just retired very comfortably, and I thank you so very much.
You're very welcome.
Long pause now, maybe 20 minutes or so.
Okay, now for the question. I love listening to talk shows, and I listened to one earlier, and no, I will not. I won't send in my information. They're talking about a rat or a raft, and it's some insurance product where you get money back tax-free. I have no desire to do it, but I'm just curious about what they're talking. I don't want to send my...
Are you sure it's rat or rap? I mean, which one? Because it sounds a little like the former, not the latter. I don't know.
It's the raft. It's the raft.
I can't make it out, but I'll let you talk, and I'll hang up, and thank you.
You're welcome.
You're
welcome. This is another one of those folks who's making up these cool little acronyms.
Because it's easy to remember, yeah.
Yeah, RAF stands for, and this is totally made up, the retirement approach free of tax. It's about taking control of your future through safe investing and earning 8 to 10% tax-free.
Yeah, and I want safe returns 8 to 10%. Sign me up for that. Bingo.
It's a variation on one of the things we talk about all the time on the show. It's called an indexed product, but instead of it being an indexed annuity, these incompetent crooks, and that's what I'm going to call them because that's what they are. They're very creative crooks selling a legal product but misrepresenting it in such a way that it is crooked. And I'm not talking about in terms of being illegal, but crooked doesn't mean illegal. Crooked means wayward, deception.
Yeah.
These products, and again, this is a name one of them made up. I'm not going to share her name with you.
I thought maybe it had something to do with our long-running winter weather here, but okay.
No, it's about indexed universal life. It's an insurance policy combined with futures on the S&P 500 that give you a portion of the return of the stock market in good markets and no downside. And down the road, you can borrow against the policy, and that's what makes it, quote, tax-free. It's not really tax-free. You don't pay taxes as long as it's a loan against the policy. If you ever let the policy lapse, though, every single one of those payments made to you that were supposedly tax-free are fully taxed.
We just went through one of these recently with a young person who's pouring a lot of money into one. A lot of money.
And I despise the people who sell these with a white-hot passion. And I know I'm going to get accused of being bombastic again, but what bothers me about it is that you guys are getting taken advantage of. And, I appreciate Sam calling with it because this is one of those kinds of things that you need to be aware of. If it sounds too good to be true, it is.
And this gets back to where we started the show a little bit because we're talking about how market manipulation in the 50s is quite different today. That really investing then was either buying individual stocks. There were some mutual funds, not a lot.
Very few. As a matter of fact, in the 50s, there were about 100 mutual funds in the country compared to 8,000 today.
And frankly, we'd probably be okay with just the 100 done right. We really don't need the 8,000. So the world has changed, and insurance companies, frankly, have had to change with that. Now, in that era, people were buying more insurance. They were buying especially more whole life policies. We'll talk about the difference today, what you're buying, and why that might not be the best idea for your long-term financial health.
877-397-5666 is our phone number, 877-397-5666. You need help. I know you do. That's why we're here.
Tom and Don are talking real money.
If you're one of the many podcast listeners who's asked, how do I attend one of your classes? Well, we've decided to take our very popular lunch ed classes that we've been doing at our offices and also do them in the form of a webinar online. At the same time, I'm doing the class live elsewhere. You can sign up for these live lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. We have a limited number of seats available because we have to pay for them, so reserve your place right now. We're going to have classes in the future on a variety of topics, so check them out regularly at talkingrealmoney.com. It's under the event section. And there is a small fee for these classes, just $5, but you're going to get a great education, not a sales pitch, and a free worksheet and some other perks. So sign up for our next Lunch Ed class right now at talkingrealmoney.com, talkingrealmoney.com. And now, more Talking Real Money.
Your guides to a really great financial future. Tom and Don are talking real money.
And as Elmer Fudd might have said, be very wary of the money media. And take it from Dr. Marcus Welby, but this was before he went to medical school.
Oh, the Wall Street Journal. You planning a little stock manipulation?
You're really on that one today. I tell you what, you got that going.
That's Marcus Welby. This was his job before he got his MD.
Manipulation? He
was
some real
money.
Yeah.
He was an insurance salesman, went on to become a doctor. Mm-hmm. You all knew and loved him as Marcus Welby, MD.
I thought that was the show because I heard the voice, but
Father knows
Yeah.
best.
All right, so speaking of that, and speaking of the insurance industry, we mentioned that really, in the last 60 years, the game's changed to some extent. It hasn't, by the way. If you just built a diversified portfolio 60 years ago and kept it at a low cost, you'd have done great. Nobody did that because index funds didn't really come around for another 20, 25 years. But you, the American investor, were really kind of hiring a broker or buying a few stocks on your own, or you were putting money away in either term or whole life insurance policies. Not putting it away, obviously, in a term life policy, but in a whole life policy. That was kind of how it was done, right?
Right.
Yeah. 100 mutual funds, the landscape pretty small. Fast forward to the great year 2016. Numbers are just down.
That's where we are today, correct?
Well, yeah, 2017.
Well, we're close.
Yeah.
We're 2017.
But if you look at 2016, for example, and you look at, one of the big players in the insurance business called Prudential. You might have heard of them. They're kind of big. They sponsor a lot of golf tournaments and the like.
Like a rock.
There
Oh,
you
wait,
go.
that's a different brand.
You get the message. Okay. So it turns out that you, the American public, are not as interested in buying insurance per se. I, by the way, have a lot of term life insurance, so that's why I drive slow.
Yes.
I drive
There's
slow.
a lot of term out there.
Yeah.
But people aren't buying cash value
They're not
insurance,
buying
which is the
cash
big
value.
money maker.
Right. But what you are buying is, and this came up this week in a conversation with someone who's retiring from Boeing in the next 2 months and has a nest egg and said, I went to a class where it was at their place of work that was taught by somebody that said you just put that into an annuity and then you don't have to worry about it the rest of your life. It's okay. And Prudential last year profited to the tune of over $2 billion profit in annuities. Profit. Why?
Annuities are very, very good for Prudential.
Yeah, they're terrific product for that firm. They just haven't been, and you can go back and read the literature yourself. It's from time to time, the financial media you can really trust has written about this. Forbes wrote a great piece about these type of annuities a few years ago, and they called them a protection racket. Because even when markets went down or markets went sideways or markets went up, in all those cases, just buying index mutual funds and paying yourself out of that was better than giving the money to the insurance company and having them return it to you less their expenses.
I was very curious when you said if you went back to Marcus Welby, Father Knows Best days,
Yeah.
and put money into a well-diversified portfolio, globally diversified stocks and bonds. I looked at 60-40, 60% stocks, 40% bonds. Let's say you, instead of putting that $10,000 you'd been saving in a savings account for years into that whole life policy. You put it instead into the 60-40 mix of stocks and bonds over that 60-year period.
Yep.
$10,000.
Mm-hmm.
By the end of 2016, $2.6 million.
You did okay. Yeah.
You did okay, and you didn't take a lot of risk doing it.
But this gets back to the top of the show around I'm talking to you
what
in the
you
audience.
should believe.
No, I mean, and the ease. Because if you just went to the 40-minute pitch, here's my money, take care of it, send me a check. It's easy to do. It's simple. I don't have to worry about it. Conversely, when I was talking to this person and saying that has been a great approach for the people selling the product, not a great approach for the people owning it, but it makes them feel it just simplifies my life. By the way, it's inefficient. Inefficiency comes in other ways, and we mentioned this too at the beginning of the program, and that is banks profited to the tune, didn't profit, but they had income to the tune of $33 billion in 2015 from overdraft charges. $33 billion. Do you think they want you to be efficient or inefficient? Do you think insurance companies want you to really pay attention to how all this works, or just give them the money and it'll be okay? You know the answer to that.
Yeah, I don't have to tell you the answer to that. But one of the reasons why people fall for this, why they fall for this raft strategy, why they fall for these master limited partnerships and all of this other garbage and annuities and the like, is because of people like Brett Aarons from Market Watch, who write columns like this one with the headline, "This is the most overvalued stock market on record, even worse than 1929." And he goes on.
Oh, goodness.
He bases his headline on a statement made by John Hussman that these are the steepest median valuations on record and the market is going to go straight down. Now, later in the article, he says, by the way, John Hussman is a perma-bull. I mean, a perma-bear. He's been a bear all along.
Yep.
He said that he was right in 2000 and 2008, but he's been wrong all along. So I decided to look up John Hussman started a growth fund back in 2000 when he was in the media. And I wanted to see how his growth fund, this is a fund that's supposed to grow, thus the name growth, strategic growth fund.
Yeah. Does it actually invest in stocks?
It does sometimes when it feels like it.
And other
when
times
it feels
it's
good
in
about
cash?
them. Yes,
okay.
When it feels bad.
Timing.
Yeah, and because it's, and Hussman's been saying since 2008 the market's going to go lower. It's going to go lower. Well, okay, it's almost 10 years later, and eventually it is going to go lower.
If you just bought and held the S&P 500, you're up about 250% in that time.
Yeah. So how has his fund done where he's trying to predict the market over the past, not 5 years? Well, I can give you 5. But I don't want to give you 5. I'm going to go clear out to 15. I want to be fair. I want to give him a long time.
Yep.
This is from Morningstar. His average annual return for his fund, 1.11 negative. Negative 1%
and what's
per
the
year.
Expense ratio? What's he charging you every single year for the pleasure of losing 1% a year?
1% per year. Yeah, you get the pleasure of losing 1% per year, and every year he makes 1.09% per year.
All right.
And in addition, he underperformed bonds by 5%.
What a great racket. How much money's in that fund, by the way?
That's the other shocking thing. $500 million.
No.
Yes.
$500 million because he...
Well, 400 and change.
All right, well, he goes around and scares people to death as they say, I really want a piece of that to protect myself.
Right, and this is his strategic growth
Folks,
fund.
You can protect yourself by owning short and intermediate term bonds at a tenth of that cost and not having to worry about the future. Really?
Yeah, and you want a more telling number?
Good Lord.
The past 5 years have been extraordinary for stocks.
Oh, yeah.
Really extraordinary.
Mm-hmm.
His average annual 5-year return, -9.
A year?
He's lost an average of 9. No,
a year?
An average of
good.
9% per year
Still
over
has
that time.
400 and something million. Wow. Woo! What a racket.
Yep.
What a
That
racket.
market timing sure as heck works, doesn't it, John? And Brett, who publishes this drivel. Be back.
Tom and Don are talking real money.
I discovered something really interesting not too long ago. It's the fact that people still like getting printed magazines. I read most stuff online, but the vast majority of subscribers to almost every publication known to mankind subscribe to the print edition. I didn't realize. I'm sorry. So I've decided to correct my mistake, and I have created a brand new magazine, the only one that I know of that is totally devoted to real investing. It's called, aptly enough, Real Investing Journal. Real Investing Journal comes out every single quarter. Real Investing Journal is not about speculating. It is not about business. It is not about lifestyles. It is not about politics or other news. It is strictly about the process of building wealth by becoming a real, disciplined, scientific-based investor. And it comes out every single quarter, and you have an opportunity to get it for a lot less money and to lock that price in as a charter subscriber. Annual subscriptions are going to run $25, but if you subscribe soon, you'll be one of the charter subscribers who not only gets it for $15 a year locked in, but you'll also get the very first issue of Real Investing Journal as a bonus while supplies last. So here's how you subscribe. It's really easy. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. And then what do? You subscribe. Then we'll start mailing it to you. And if you don't enjoy it, I'll give your money back. What do you have to lose? You got nothing to lose. So go to realinvestingjournal.com/subscribe, become a charter subscriber to Real Investing Journal, and I guarantee you've never seen a publication quite like this because nobody that I can find focuses on the truth about investing, except, well, of course, now Real Investing Journal. So go to realinvestingjournal.com/subscribe, realinvestingjournal.com/subscribe, and I know I said that a lot, but I want you to remember it. And now back to the show.
For your real life and real future, Tom and Don are talking real money.
When it comes right down to it, though, what's the number one reason you save and invest? To make enough money to retire comfortably, to take care of yourself and your family in those years when you're unable to work. And to that end, we at Vestory teach a bunch of classes on building the right portfolio based on science, not based on all this goofy stuff we talk about during the show that is so bad for you. Tom is going to be teaching his next class on the 15th of April at an event called Retirement Roundtable in Bellevue. And this is an all-day event on retirement. You can get your tickets now at TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?
Here's another brief interruption. I am surprised at how much people still love their magazines, their print magazines. The vast majority of the most popular magazines on the planet have millions of print subscribers and only a few 100,000 online subscribers. I learned people like reading on paper, and because of that, I've decided to create a brand new magazine for real investors to help you become a real investor. It's called Real Investing Journal, and it's full of just that, real investing information, the science of investing, the proven ways to make money long-term without gambling. There's no business news. There's nothing about speculating. There's no lifestyle stuff. It is all about investing all the time. It's a full-color magazine. It's printed every quarter, and it's going to cost $25 a year is all. That's all, $25 a year. But here's the deal. If you become one of our charter subscribers, we'll lock in $15 a year, and while supplies last, you'll get the very first issue in addition to your next year. That's a deal. $15 a year, and if you don't like it, I'll give you your money back. That simple. So go right now to realinvestingjournal.com/subscribe. You need to add that /subscribe. realinvestingjournal.com/subscribe and sign up for the charter subscription rate of only $15. You save $10 and you lock it in, and you get an extra issue. And you need to do it now because I know we're going to run out of the extra issues, so you better hurry. Go to realinvestingjournal.com/subscribe. realinvestingjournal.com/subscribe. You'll like it or your money back. And speaking of back, we're going back to the show now.
Reality radio for a really great future. We're talking real money.
Really, that's what we're talking about. Hi, everyone. I am Don McDonald, one of your hosts. That is Tom Cock, your other host. And we're here to guide you through the very confusing, frustrating, baffling, and bewildering world of money and investing and trying to help you make a little more money so you can enjoy a much better future. 877-397-5666 is our phone number, 877-397-5666. If you need a little help, we're here to do it. But Tom, we don't do it alone. We don't do this alone. I didn't realize that there was this much help everywhere you turn in America.
Yeah, I get a sense this may be the bombast returning, but okay.
Not my bombast.
No, go.
This is 60-year-old bombast.
All right, hit me.
I did not realize that there were other investing lessons hidden within Father Knows Best. You remember Bud, the son?
Oh, yeah, how could I forget him?
How could you forget? Bud, in the 6th season, was an older young man. He had a job at a gas station.
Older young man, yes, okay.
And it was suggested that he take his hard-earned $50, which in 1956 was a heck of a lot of money, and put it in a stock, a copper company.
Burdick dropped by the gas station this afternoon on his way up to the mine.
Go ahead.
Do you know what Blue Hill Copper is selling for today? Exactly
tell us.
2 weeks after I bought it for
Yes.
$1 a share.
$1 a share is now
$3 a share.
sell.
$3?
Oh,
Yes, darling. I've tripled my money. Your brainless, impractical, immature brother, with his silly stock, has made himself, in 2 weeks, exactly $100.
did he sell at that point or not?
No, he did not. And a
He
week
got
later,
greedy.
a week later, he went by the copper company's office,
And it
the
was
mining
closed.
company, and two movers were taking out all the furniture because they were 3 months behind on their rent. It was all a scam.
Why does everybody and commodities? It's always commodities. We have somebody that works with us who has a lot in a company that's drilling one oil well that will either make them a gazillion dollars or lose them everything. It's always
Everything.
commodities because people think that's going to make you rich, but
It's always,
Ah.
and it always is, the lose you everything option. And as a matter of fact, my great granddad was in the oil fields of West Texas in the 20s, and he put all his money into wildcat oil wells. And before the Depression, he became a multimillionaire.
yeah, then
And then the price of oil plummeted, everything fell apart, and he went totally and utterly bankrupt. I remember visiting him as a kid in the 60s, and they had this big, beautiful house that they paid for. Big, huge, beautiful house in Texas. And they had a swimming pool. They were that rich at one time, and then they had to fill in the pool with dirt because they lost
couldn't
it all.
afford the water anymore.
They couldn't afford the water and the cleaning and the maintenance and
Oh, I shouldn't be laughing. That's actually
no,
not
but
funny.
it's what we do as human beings.
I
We
know.
get involved in somebody tells us a great story.
And it's most what people. This is what people end up believing about investing too. It's either an all or nothing proposition. I either make $1 million or I lose everything. No, it is not that.
No, and that's what the point we're trying to make. Real investing is not a matter of gambling. It is not even close to gambling. There is a huge difference, and you need to recognize the difference between speculating and investing. And the two are not synonymous. And you will be happier, healthier, and wealthier once you make that realization. You decide that what these folks are selling you is truly, as they say, a bill of goods. You are not going to be in better shape in most of these scenarios. They are going to be the ones in better shape, like the guy who sold poor Bud $50 worth of worthless copper stock in 1950. It wasn't 56. So this would be 1962 or 3 now.
Yeah, his sister can go back to calling him all the things she called him because now they're right, I guess.
Yep.
Yeah.
Yep.
Sorry.
877-397-5666 is our phone number. That's 877-397-5666. Anything from the basics. I mean, if you don't understand some of the stuff we tell you on this show, please let us know what you don't understand. we would love to explain it to you. We just don't know which thing you don't know, so we could just sit around explaining stuff all day, and that wouldn't be any good. So call us, or if you're trying to build a better future, if you think you're being misled, if you don't know what you're paying for your investments, if you don't know how good they might be for you, if you don't know how diversified you are, whatever it is, give us a call. 877-397-5666.
Tom and Don are talking real money.
Our lunch ed classes that we've talked about occasionally during the show have been so popular that we're now expanding them to our offices in Portland and Phoenix, and we are going to start doing them online too. Well, you won't get the lunch if you do it online. You will get a great education, and you can go out and grab lunch and join us for Lunch Ed. Just sign up at TalkingRealMoney.com. That's TalkingRealMoney.com. There is a very small fee, just $5, but for that, you get a worksheet, and you get access to some special offers, so it's worth it. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com, and get a real investing education. That's TalkingRealMoney.com. Now back to the show.
Your guides to a really great financial future. Tom and Don are talking real money.
And we are really trying to, what? What are you laughing
No, I'm
about?
laughing because, again, the theme of the program has been inefficient, how inefficient we are as human beings. And when it comes to the financial area, we make corporations billions of dollars because it's okay. And I was doing the same. I'm laughing because I'm having my soup. I was doing the same thing with the soup.
It's the soup.
The
soup.
The soup. Because I was buying a certain brand of soup in the store for like $2.40 or something. You said, hey, they sell that at a certain delivery service company.
Amazon.
Okay. And so I went online and did that. I'm paying like 40 cents each instead. Now, I had to buy more of it, but I'm going to eat it anyway. So there you go. There's a simple example.
I have the title for this week's podcast.
Yes.
Sitcoms and soup.
Oh, God, your sitcoms and soup. There you go. Are we going to get another piece before we go to the phones? Or you're gonna,
No. I don't. But the
alone.
rest of it gets too sad. Bud's like,
He
he
blows
got
up
his
and-
friends involved.
Really? Oh,
yeah,
man.
no, it's bad. His friends are mad at him now.
Yeah, thanks for the great stock tip.
Yeah,
the stock manipulation there, Bud. Yeah.
877-397-5666, Bud. Call 877-397-5666.
Before you invest.
Before you invest in a stock company, Bud. Did they even have 800 numbers in? No, I think back then it was like,
yep.
Marge, give me Plaza 4735,
GL4.
please.
Yeah, whatever it was, yeah.
877-397-5666. Okay, all right. We're going to answer real human beings questions.
Okay.
Instead of people who are fictitious characters on television. Jim, welcome to Talking Real Money.
Hey, Jim, how can we help?
I have a 529 question for you.
Yes, sir.
This is a Vanguard plan, and what I'm thinking about, I'm going to put $10,000 in 529 for my grandson, who will be a year old next week. And questions I have is, what happens when when he decides that he's not going to go to school? What happens to that money that's drawn in this fund, the 529? And then what happens if he's not going to school and he's also doesn't have any kids? What becomes of that?
Well, do you have any other grandchildren?
No.
Okay, so this is the one, the only. So here's what happens. Then you're the owner of the account, right? Because you put the money in. So it's a pretty simple equation. Then you're going to pay tax on that gain at that point when you take it out.
Or if down the road you have another grandchild or someone else, you can designate a new beneficiary.
Correct.
It can even be an adult.
They want to go back and get educated.
A full-fledged adult, as long as they are getting what is called a qualified education. And that could include your grandchild if they want to, say, for example, go to a trade school or something. It doesn't have to be a college education. As long as it's but you can change your beneficiary designation.
So your question was kind of, should I do this or should I just go in a regular?
Yeah. The other thing is we're both, like in our 70s. So what if neither one of us are here? Right now, I've got my wife down as the successor. I'm the owner.
Yeah.
Should I make my daughter the successor rather than my wife? The grandmother?
It would probably be wise to have someone a little younger in charge down the road.
I was when my dad set up plans for his grandkids, I was the successor. So, and it worked out very well when my dad passed on. So I think that's a good idea.
Well, it'd be cool, because then if my daughter does have it, or kid road at least.
Right.
The option is there. Yeah.
Right. Let's say, for example, it continues to grow in this 529, and your daughter has a grandchild. Boy, will that be a lot of money for them.
Bingo.
Yeah. Yes, the idea. Okay, well, that answers my question.
Thank you, Jim, for your call and your question. Great question. 529.
877.
And let's give our favorite plan, which is now
Utah.
Yeah. Okay.
Utah has a great 529 plan.
UESP.org.
Utah Educational Savings Plan.org.
Age-based, very low expenses, index funds, terrific plan.
Very inexpensive.
Yeah.
877-397-5666. That is our number. We'd love to help you understand this stuff a little better and maybe put a little more money in your pocket or someone you care about. And, Bob, you're next. Welcome to Talking Real Money.
Hi.
And the bells are going off. Bob, are you in a cathedral?
No, I was near a wind chime. I'm going inside now.
I thought maybe you're getting married or something there, and you're going to ask us what the best tax break would be.
Bells are ringing.
Yeah, it works for me.
Well, I have everything in Vanguard, but I don't have the Vanguard REIT. And you had mentioned that, but I have a couple of questions. Is this a time to get into it or move into it? Because the malls are not doing well.
Well, let me go back.
Right
by the way,
now,
first of all,
that REIT is making minus 4% or something. Well, 0.4.
Well, I don't know what the return has been, but let me ask you one thing. First of all, do you have qualified accounts like an IRA or something like that?
I have both, IRA and a regular
because you really wouldn't want to use a REIT in a taxable environment. A REIT, as you know, by law, is required to pay out 90% of its earnings every year. It makes it horribly tax inefficient. So that would be number one. Number two, your question is, why would I want to buy REITs today? Because they're not making any money, malls aren't doing well, et cetera, et cetera. The Vanguard REIT owns many other types of commercial REITs that go well beyond malls. And again, when we look at long periods of time, here's what a REIT, the asset class group of stocks that have similar characteristics really has done. It's diversified so that it's made the ups and downs less. Right? It's been a diversifier more than it's been adding return over time, even though in the last 16 years, I think since 2000, it has done better than just stocks. Don was trying to see how many other types of things it owned for you because he wants to dive into all this.
Yeah. The Vanguard. Now, bear in mind,
percentage, you think?
Yeah, it makes sense to have it in a portfolio, Bob, from the perspective of reducing overall portfolio volatility, because real estate sometimes zigs when the stock market zags, and vice versa.
Right.
So they don't move in lockstep. Whatever is happening today is just noise.
Yep.
It's noise.
Yeah.
Today's mall issues will be solved somewhere else. And bear in mind, this portfolio, its number one holding is Simon, but Simon is actually very good at and they've repositioned their malls multiple times. They've gone from the enclosed mall to the open air malls. They have
no open air malls today. None.
No. But they've changed with the industry. And the number two thing is public storage. Then there's a bunch of apartment buildings and other commercial properties. So you've got wide diversification. And remember, overall, the returns of real estate have been similar to the stock market, just at different times.
Tom and Don are talking real money.
Our lunch ed classes that we've talked about occasionally during the show have been so popular that we're now expanding them to our offices in Portland and Phoenix, and we are going to start doing them online too. Well, you won't get the lunch if you do it online. you will get a great education, and you can go out and grab lunch and join us for Lunch Ed. Just sign up at TalkingRealMoney.com. That's TalkingRealMoney.com. There is a very small fee, just $5, but for that, you get a worksheet and you get access to some special offers, so it's worth it. Sign up now at TalkingRealMoney.com, TalkingRealMoney.com, and get a real investing education. That's TalkingRealMoney.com. Now back to the show.
For your real life and real future, Tom and Don are talking real money.
Wow. 877-397-5666 is our phone number. I was just looking up another episode of Father Knows Best during the break.
Oh, my goodness. You really need to find a new avocation. Okay.
This was what I was on today because I wanted to find that audio about insurance. And there was one episode, and I'm going to now have to go watch this because I think there's a lesson for us all, not as investors, but just in general. There was one episode that they categorize on IMDb as, it doesn't show it in any of the seasons, it says unknown season. Unknown season. And the title of the episode is 24 Hours in Tyrant Land.
Wow. Father Knows Best.
Tells the story of Springfield under the control of a tyrannical despot.
This is the insurance executive?
I guess it's the insurance industry. They took over the city.
I kind of figured.
877-397-5666.
Let's go back to REITs just for a moment because, again,
they're important.
Yeah, they are important. And so only in a qualified account like an IRA, when you look at it because one of the questions that Bob said was sort of how much. Overall, if you're looking at your entire stock portfolio, REITs should probably make up around 10% of the stock portfolio. Remember, you're also going to have big companies that make up a lot, small companies, U.S., international, all these parts of the portfolio that are balanced out. We don't know. You could have overweighted in certain periods of time to certain parts of that portfolio, and that's what you hear from the financial media a lot. Like, well, this is a bad time to buy large companies because it's all about small, or this is a bad time to own REITs because they're not making any money. That is just what Don said, a lot of noise. You want to have a balance of all these things in your portfolio. You can do this all in mutual funds. Bob mentioned the Vanguard REIT, which we've talked about. You do that and you ignore all the people at Market Watch or Jim Cramer. We just had a story about Jim Cramer who I was talking about Steve Bannon's father who sold out because Cramer told him in 2008, if you want any of your money again, get out of the market right now. Well, that turned out to be terrific advice.
Yeah, his dad got out of the market and stayed out for the entire very much like John Hussman did.
For the life of me, I could not understand that article. I know you tried to.
I did try to explain it to you.
It made no sense that Steve Bannon's dad lost $100,000 on AT&T stock, and that wouldn't have happened in the old days because they would have protected him. No, we just heard an episode of Father Knows Best where the Bud did the same thing. Yeah, that literally made no sense. But the point is, that stuff comes at you every day. The good news, the bad news, the entertaining. You got to put it aside. Please.
All right, let's go back because I want to go back to your REIT point and portfolio building because I think you're making a very powerful point that people need to get.
After how many years?
Our phone number is 877-397-5666 if you'd like to figure out how to build your portfolio. You mentioned to Bob that if he's going to own REITs, he should own the REITs in his qualified accounts, which would be an IRA, Roth IRA, that kind of
401k,
thing. 401k. And then you're talking about this diversification. Here's something you, as an investor, if you're doing this yourself, and this is one of the things that make do-it-yourself investing a bit of a challenge, is getting the diversification done properly. And this is where an advisor can help. For example, your REITs and your bonds, those are both immediately taxable as income outside of an IRA or a qualified plan. So you want to load those. You want to overweight your IRAs, for example, with real estate and bonds, which are highly taxable, or dividend-paying stocks, dividend-paying mutual funds like large cap funds, and keep those assets that are tax advantaged, like small company stocks. They don't pay a lot of dividends, so you get capital gains there. Those should be outside of the IRA, and so you get that
asset
10%
location.
It's asset allocation and location.
Yeah, most people overlook that. They don't think too much about it, and they end up paying a lot of taxes that, frankly, they didn't need to pay. It's kind of silly.
And this goes to Vanguard and Morningstar's studies of several years ago that show that a good fee-only advisor, a low-cost fee-only advisor, can add between 1.5% to 3% to your net return a year, net return a year, because of those kinds of things, because of allocation and location and rebalancing.
Staying cool.
Tom and Don are talking real money.
Let me just take a second to share something new with you. We're going to start doing our lunch ed classes that we do at our offices in Phoenix and Portland and Seattle. We're going to start doing them online as a webinar at the same time. So you can attend too. You just won't get lunch. You'll have to go get lunch. But it's also cheaper. It's only $5 a ticket, and you get a full color worksheet and some special perks. So sign up for our upcoming lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. It's under the events section, and you will get a real investing education on a variety of topics. So go to talkingrealmoney.com, talkingrealmoney.com.
Radio for a really great future. We're talking real money.
I learned so much during the breaks.
Oh, no, from the sitcom again?
I did, yeah.
Yeah.
I had to know this show, 24 Hours in Tyrant Land, from Father Knows Best in 1959.
Mm-hmm.
It was not broadcast on television.
How come?
It was created by the Department of the Treasury, funded by the AFL-CIO.
Wow.
It was created to sell savings bonds to fight global communism.
They can pave the way to the big things in your life.
It's about
it goes far beyond that.
Peace and prosperity through savings bonds.
Yeah, that makes good sense. Sure.
I just think it's so interesting. All right, it's about money. It's Department of the Treasury, savings bonds.
True.
I
Yeah.
fit it in.
Okay.
877-397-5666 is the phone number. If you want to watch that, it's the only place I found it is on YouTube. And somebody put it up there and they said, because this was paid for by the government, it's in the public domain, so don't take it down. They're right. It is in the public domain. It's paid for by the government. Johnny, welcome to Talking Real Money.
Hi, Johnny. How are you?
Good. How are you?
We're doing great. How can we help you today?
Yeah, I'm interested in adding investment about Vanguard, talking about real estate. And I wonder if I can anytime withdraw my money if I need it when I invest onto that Vanguard thing. And also, can you repeat that again one more time, how to invest on that Vanguard real estate?
Yeah, okay, so let's go back.
Let me give you a couple of little points.
This is not a speculative play, and we're not recommending you run out and buy the fund. Don?
Right. Correct. This fund should be a good real estate investment trust mutual fund, low cost like Vanguard's, should be used as a portion of a very well diversified portfolio of stocks and bonds created to match your risk tolerance and your need to take risk.
I always worry when we mention things like this that people are going to think, I got to run out and buy it. No,
this is not. We are not telling you this is the next hot thing to buy because we do not predict the future. If you invest in a real estate investment trust fund like this, you should consider it to be a very long-term investment. But yes, at any time the market is open, you can sell the Vanguard REIT Index Fund and get your money back at the closing price that day of all of the securities.
You could go and you could type it in Vanguard REIT if you wanted to look up the fund.
It's
right there.
The symbol is VGSIX. VG6.
VGSIX.
SIX, yeah. But again, please bear in mind, we are not in any way, when we mention something here, we're not recommending anything. We're talking about the right way to build portfolios for each individual. We don't believe in speculation at all, ever. Unless it's helpful? For fun and you're going to Vegas.
Yeah, it helps. I have another question.
Yes.
Yes, sir. Go ahead.
What can you say about day trading? Because I'm thinking to start to do day trading.
I'm glad the windows don't open to the outside here. I'm gonna ask you to not bring that up again because it's very upsetting to me. It honestly is because no, it is because people hear the ads and they go buy the program and they think they're going to be rich. And if you hear the ads, they're even more outrageous because they get one guy who said, this has been so easy. All you got to do is follow the discipline. Everybody makes money. Okay, well, here's the reality.
That's somebody paid to say that.
Well,
it's not even a real person.
But beyond that, the
90%.
professionals don't. The guys that do this every day. And look at the guys beyond those guys, the hedge fund guys that are supposedly going to make you gazillion. They don't do it. So why in the world would you think that you can, Johnny? Why do you think you can out-trade the market? How do you think you're going to outsmart the guy on the other end of the trade? Remembering there's 60 million trades a day, and people, no would be my answer.
Now I'm the calm one.
Okay. Yeah. Okay.
That is not investing.
Do not ever do that,
okay,
Johnny.
Thank
That
you,
is,
Johnny.
yeah, Johnny. Day trading is absolutely no doubt about it. Pure, unadulterated gambling. You stand actually. Learn to count cards a little.
Yeah.
Go to Vegas, play blackjack.
Because otherwise, they'll run you out.
Yeah, don't do it too much. But you can kind of keep track a little. Learn some of the basics of blackjack. Your odds of winning at blackjack are much, much, much higher than your odds of winning at day trading. Much higher.
Great question.
Really?
Though. Great question.
And wait, the drinks, they're free. I think that's a win-win all around, don't you? 877-397-5666 is the phone number. I'm the calm one? 877-397-5666.
Tom and Don are talking real money.
If you're one of the many podcast listeners who's asked, how do I attend one of your classes? Well, we've decided to take our very popular lunch ed classes that we've been doing at our offices and also do them in the form of a webinar online. At the same time, I'm doing the class live elsewhere. You can sign up for these live lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. We have a limited number of seats available because we have to pay for them, so reserve your place right now. We're going to have classes in the future on a variety of topics, so check them out regularly at talkingrealmoney.com. It's under the event section. And there is a small fee for these classes, just $5, but you're going to get a great education, not a sales pitch, and a free worksheet and some other perks. So sign up for our next Lunch Ed class right now at talkingrealmoney.com, talkingrealmoney.com. And now, more Talking Real Money.
Your guides to a really great financial future. Tom and Don are talking real money.
I'm Don. That's Tom. Welcome back to the show. 877-397-5666 is our telephone number. The time to call, noon Pacific, 3 p.m. Eastern time if you're listening to the podcast on Saturdays.
Well, we get callers. We've had callers from all over the country called in live.
Yeah, I know.
Yeah, so
I know.
All parts. I got a question for you. So, publicly traded
Did
companies.
you call? No, you got to call in first.
Oh, hang on.
Yeah.
They don't have any phones in here.
There's no phones in the studio.
No.
All right,
phones.
what's your question,
My question
sir?
goes like this.
Tom, you're on. Welcome to Talking Real Money.
Thank you. Publicly traded companies have boards of directors, right? I mean, these are people that provide oversight to the management of the company, correct?
Oh, I think I know where you're going. You were
Where
listening
am I
to the
going?
news, weren't you? You
Where-
were listening to the news, weren't you?
Okay, help me understand that.
You're talking about Expedia, aren't you?
Yes, I am.
How did I know that? I know how you're.
This is not political.
It is too.
No, not from my standpoint.
All right.
Okay, give me the answer.
It's political.
Okay, I'm simply asking, and I'm. This has no political. As a guy who's covered business for 30 years and talked to people that have run major publicly traded companies, like Boeing, Costco, Starbucks, all that kind of thing, and their board of directors are made up of people that have been pretty substantial business people. They have a lot of expertise. They've done a lot of things in business. I don't understand.
Well, now let's think about this for a minute. I mean, since she has gotten out of school,
and she went to very fine schools, she's very highly educated.
Fine schools.
No question about that. And she
has
hung out
a
with some very
doctorate.
powerful people. Yeah.
The young lady has a doctorate
in
philosophy.
Okay. That's helpful, too. Yeah.
She's worked for NBC, McKinsey, the consulting firm.
Yes.
Avenue
Short run
Capital,
there, from what I understand. Yes.
NYU.
Yeah.
She also serves on the board of Cornell Medical, IAC, which is a big media company.
Oh, IAC, okay. All
the
right.
School of the American Ballet. So she's got experience. Young ladies, you see, I think, here's what happened. We've gotten old.
By the way, we're talking about Chelsea Clinton, if you didn't know.
Chelsea Clinton. We've gotten old, and Chelsea
that's
got
true.
old, too.
How she 30?
7 years old.
Okay, I thought she was like 31. Okay, all right.
She's 37
I know. I still
years
think
old.
of her in the White House.
She's
Got it,
almost 40
All
years
right.
old.
Okay,
And
all right.
she's got a pretty darn good resume.
Okay. When I heard it, it just sounded
her CV
unusual.
is pretty impressive.
Okay.
I gotta tell you, if I had a big corporation and looked at just her CV,
not the name. Okay.
Not the name, I would go, wow, she's got great education.
That's true. She
Killer.
got connections. Certainly.
She got her doctor of philosophy, in international relations from Oxford. Dude.
Pretty decent
Not
place.
a bad college.
Yeah.
So, I don't know, I'm pretty impressed with her.
All right. Okay.
I'd put her on my board.
Well,
and
maybe
that's
we
not
will.
political at all, because I am a Republican or a Democrat. I'm not sure which one I am.
You are so far in the middle that
I am.
Yeah.
I cannot lean either way. I won't. But you know what's kind of nice? I can't fall over because I can't lean right or left. I just right there in the middle.
All right. Well, I want to go back also to that
somebody,
one. I'm glad that was helpful.
Still makes me crazy.
That was helpful because we started the program off a couple hours ago talking about.
It's been so
messaging.
long.
No, at the end of the day, all these messages you receive. That's what it is.
Okay. Yes.
You hear 5 seconds of them, 10 seconds. Some of you read more thoroughly than that at websites or newspapers or all that kind of stuff. So my question to you, and we tell you to tune most of it out. My question to you is, okay, but what should I read then?
I know. That's my problem.
Where do I go to get some education so I have some understanding of all this?
On a daily basis, I read 3 newspapers, cover to cover every day.
Celebration News. That's only 3 pages.
That only comes out once a month.
Oh, okay.
It only comes out once a month.
Okay.
And it's put out by the Homeowners Association.
I know. I love that thing. Yeah, it's great. Great pictures.
No, I read the New York Times, the Wall Street Journal, and the Washington Post every day.
Mm-hmm.
I have these services that accumulate all this news from all these other magazines.
This is why you don't answer the phone until after 10 in the morning.
Exactly. I've got it. And in all of that, I read so much about money. I read Market Watch every day. I read everything I get my hands on.
So where should people go?
I wish I knew.
That is not a good answer.
I think that most, if not all, of the financial information that is promulgated by the media in America is bad.
Okay, I'm going to give a couple ideas. Okay, number one.
Okay, go ahead.
No, number. I mean, and this is shameless plug. No shameless plug for your book, Financial Physics, which you can buy
Not
used.
The best book, but
you can buy used for $54 or something at Amazon, right?
No, somebody's got it for like $170 or something. It's ridiculous.
Don't do that.
You can buy it new for $9.95.
But you get a general education about money. Yes. Paul Merriman's books, again, a general look at kind of how money works, how to use funds, that kind of thing. And I think Larry Swedrow's, and I'm trying to remember the name of the book going back because he's gotten into the weeds.
He's gotten into
it's hard to know. And here's another one, another shameless plug. Okay, Go to a class. If you don't want to have to read, because apparently the president says he doesn't want to do that either, then go take it in. And I'm going to be doing one with our friend Rick Gregorick here in just a few weeks. Retirement Roundtable, April 15th. You come for basically half a day, and you learn a whole lot of different stuff. It's really good.
I found the Swedrow book, but it's way back from '98. I don't even know if it's still in print. It was called The Only Guide to a Winning Investment Strategy You'll Ever Need.
That's the one.
Really long title.
But if you read a few of those, you'll get it.
At Kindle. You can get the Kindle and iBooks version of it.
Yeah, but what I'm trying to give you is a little general baseline. So that because you're going to read those things, you're going to say, so when somebody comes and says, you got to own this, you're going to say, No, that was another hot idea. Like, well, let's see, technology or easy to, and then we've got another publication too. That
Why
we talked
did
about.
I start printing this? Why did I start making Real Investing Journal? Why did I start it?
Because there's no printed publication that dedicates itself entirely to investing. There are some that has investing in it, but they also have business in it.
And speculation and lifestyle. And filler and fluff and lots of ads. I just got so frustrated that one day I said, and Tom goes, "You're nuts." And I said, I did my research. Magazines are still hot. And we started publishing Real Investing Journal, which is still a money-losing proposition for us.
How many issues have we done now?
The 4th issue is going in the mail next week. This week.
All right.
This coming up. So we're at the 4th issue.
It comes out every quarter. And what does that cost?
If you get the automatic renewing charter subscription,
I hate
$15 a year.
Yeah, okay.
$15 a year. $25 a year if you don't want the auto renewal because it costs us more money to get you to renew.
I know. I don't like those auto renewal things generally.
But it saves us money.
No, I'm not. I'm speaking as a consumer. That stuff drives me nuts.
But as a business person, it makes a lot of sense.
Keep coming. Yeah, give me the $25 $15 auto renewal. Pardon me.
It's easy. It's to stop. You just go into your account and you hit stop.
Yeah, you're right. But generally, I notice after I already made the payment, and then you got to call somebody.
You got a whole year.
Yeah. Okay. All right. So, Real Investing Journal, Financial Physics, Paul Merriman's book, which now I'm forgetting the title of the earlier one.
The only...
Yeah, and then Larry Swedroe. You can look them all up on Amazon. And get the soup, too, while you're there. It's pretty good. What was it? Soup and Sales? That was the name of the show today?
No. The title for today's show is Sitcoms and Soup.
Sitcoms and Soup. Okay.
I think I may make it Wisdom. The wisdom of sitcoms and soup.
That works for me, too.
I think it's catchy.
Tom and Don are talking real money.
Let me just take a second to share something new with you. We're going to start doing our lunch ed classes that we do at our offices in Phoenix and Portland and Seattle. We're going to start doing them online as a webinar at the same time. So you can attend too. You just won't get lunch. You'll have to go get lunch. But it's also cheaper. It's only $5 a ticket, and you get a full color worksheet and some special perks. So sign up for our upcoming lunch ed classes right now at talkingrealmoney.com, talkingrealmoney.com. It's under the events section, and you will get a real investing education on a variety of topics. So go to talkingrealmoney.com, talkingrealmoney.com.
For your real life and real future, Tom and Don are talking real money.
Okay, here. Let me give you a website. This will help you remember everything because we put it all there to help you remember. Go to talkingrealmoney.com. Same as the show, talkingrealmoney.com. There you can find links to Real Investing Journal. You can find links to our classes, including Tom's upcoming class at Retirement Roundtable. You can read stuff. You can listen to podcasts. It's all kinds of. You can calculate your retirement. You can do all kinds of stuff there. So just go to talkingrealmoney.com, talkingrealmoney.com. It's that easy, talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. That's a wrap.